Now, gold or equity, this is a classical debate. One shines in the times of crisis while other builds wealth during the boom period. But what does the last decade reveal? Let's explore the 10 years journey of gold versus Nifty 50 and find out what you should do in 2025. Let's begin with gold. Now, back in 2015, the price of 24 karat gold stood at 26,343 for 10 grams. Fast forwarding 2025, it touched 87,000, and very recently it bounced back from 1 lakh rupees, which of course is a gain of more than 230% in last 10 years. Major turning point include the 2020 pandemic, which triggered a flight to safety, pushing prices up by 38% in that one single year. Again in 2023 and 24, geopolitical tension and inflation fears reignited investors' interest. When we talk about Nifty, on the other hand, as you can see on the chart, Nifty 50, on the other hand, represents India's top performing companies from 8,000 in 2015 to over 24,000 in 2025. It too delivered stellar gains of 200% in 10 years. High growth years included 2017 and 2021, supported by economic reforms, low interest rates, and strong FII inflows. However, it also saw a sharp downward trend during COVID and market correction period. Now, you can see the comparative analysis on the screen when we talk about financial experts. Financial experts often recommend a diversified portfolio because in uncertain times like 2025, thanks to Donald Trump, with elections, global conflicts, and inflation lurking, having 25 to 30% in gold can safeguard your capital. So, should you invest in gold now? Now, here is the verdict. When we talk about the upsides of gold, it hedge against inflation. It is ideal in uncertain markets. It is highly liquid via gold ETF because you can sell and purchase ETF anytime you want to when the market is there. When we talk about the downsides of gold, it does not deliver or give you any dividend or compounding. Long periods of underperformance can also be there. On the other hand, when we talk about the equity upsides, wealth creators over long period of time, and it is backed by growing companies. However, there are certain downsides too because it is quite volatile and it needs patience. Now, it is impacted by macroeconomic shocks too, something which we have seen in the recent past. So, what is the final takeaway? Don't put all your money in one basket. In 2025, combine the power of gold safety with Nifty's growth. And if you are risk averse or nearing retirement, lean more towards gold. If you are young and can weather volatility, ride the Nifty wave. Like this video, share it with your investor friends, subscribe for more wealth insights, and tell us in the comment section what's your ratio of gold versus Nifty. Thanks for watching.